Oh man, so Bitcoin back below $20,000 in what is becoming a critical pattern which is forming in the charts. I'm going to make you aware of the key levels we need to watch out for. As you guys know, I gave you an update yesterday when the non-farm payrolls came out to say, guys, please do not fall for this. This is a trap. They're trying to pump it up and to make it look like we're going to go to the moon when we're not. We're still in a bearish continuation pattern. Let's get an update on that pattern. Let's find out what is most likely to happen over this weekend and whether we're likely to get a weekend dump. Guys, don't forget to smash on the like button. Don't forget to subscribe. If you want to trade any of these moves, you can check out the links below to BYBIT or BitGet. If you appreciate these updates, make sure you let me know with a like button. And if the video gets progressively worse, you can undo your hitting of that like button. So, as you can see here, guys, we were forming this symmetrical triangle, and a bunch of you, when I said this yesterday, were like, no, turn it into a horizontal channel, we're getting a good breakout. No, we are not, guys. And as you can see, I'm sticking with the pattern I form. Now, one little bit of advice I received from one of my mentors very early days when I was trading, and a lot of people ask me why I do this, is why do I always stick to the patterns? And my mentor would always say to me, do not fall for the temptations of adjusting your patterns. So what you get is a lot of people will draw their patterns, and then as the pattern looks a little bit better, they will adjust their trend lines quite a lot. I try my best. Doesn't mean I won't do it, but I try my best, unless there's a clear and obvious reason to do so, to adjust my patterns. The reason for that is when the traders are trading, you have to respect the patterns that have been respected to that point. If you do notice a trend and then you break out, like I give you an example now, someone could take this line and now post it just across there, right? And use that as the top of the trend line. But that's silly because we know that the historical data here is we were in this type of symmetrical triangle where my line is left. We had a fake out followed by a throw back into the pattern. So I want to know that data. I don't want to adjust my lines and miss out on that data. Okay, so the non-farm payrolls came out here. We had a big move to the upside, up to highs of around 20,500 there, and then we got dumped all the way back with a horrible candlestick to 19,755 on the next candlestick. Okay, so now we need to be wary. We're getting to the bottom of this pattern. I'm going to share with you what price target I think this can get to, and it's not going to be fun, but it's better that we're prepared for it than not. Fear and greed index sitting at 21. Market is back into extreme fear as we have been for the last few days, but just over a week or so ago, we were getting back to neutral, right? We were in the 40s. People were getting excited, and this is what we need to manage. To figure it out, and we need to be able to adjust to that sentiment and make the rational calls as and when it matters. Now, the other point, which is really, really important, is this. When I made a video yesterday after the non-farm payrolls, the reason I waited a little bit after the non-farm payrolls before posting that video is I know how this plays out. I've been trading non-farm payrolls for over 8-9 years in traditional finance, right? That Friday was always the Friday when I would go and get on my desk and my boss was on there behind me saying, you're trading this move. So this is nothing new for me, and I know how it works, right? You get these big traders making moves, including me at the time, and therefore I know what it means for long-term investors who get wrecked, okay? So what we saw there was a typical run to the upside, and then the rest of the day you fell on all the major indices. NASDAQ falling 1.3%, S&P falling over 1%, and the Dow Jones falling over 1%. And what did I say in my video? I said in my video that this was happening because what the markets were doing was they were trying to price in that it was some good news, when in reality, there was nothing in that reading yesterday which suggested that 75 basis points was off the table. Okay, it was good that it came in at expectations, but it didn't beat expectations. You see what I mean? So if coming in at expectations shows, yes, the labor market did show some signs of reducing to the downside with less payrolls added, but it's not showing some crazy improvement where it was 150 or 200. It was still 300,000 jobs added. Now you can see that the market has now 57% priced in 75 basis points. I suspect this will continue to climb, right? As the markets go, hang on a second, there's nothing to prove to me that he's not going to do 75 basis points again. And this could notch back up to where it was before the non-farm payrolls of around 70, right? And if that happens, that means more redness in the markets. That means more risk off. And that could mean we could get some more pain here on Bitcoin. Now, where can we head to on Bitcoin? If we're falling from this symmetrical triangle, if you want to take a conservative target, guys, just take a conservative target just from here to here, and you put it at the point of breakout, fine. That brings you down to the 18,800 range. Now, even before then, I've told you guys, I'm expecting some support around 19,200. Remember, we've all but hit our target from the first breakdown, right? That happened. We just kind of picked up some support before. So we will get some support around the 19,200. Why? Because that's a pivot point here from the larger structure. Always look to your left. Always look to your left, yeah? This isn't Beyonce, but look to your left. All right, look to your left and see the pivot point, and you can see there 19,200. I'd expect some support. Now, the more worrying price target is if, let's just pop that one a different color. You can go yellow, mate. A more worrying target is the green one, because what the green one is doing is taking your previous impulse move there and applying that to the breakdown. And that's what then brings you down to the 17,600. So when I'm calling out a number like, oh, maybe we could be getting to 17,600, and why I personally start preparing for those numbers, it's not because some YouTuber has said it. It's not because somebody has shouted that number out. Oh, we're heading to 10K. Oh, we're heading to 15K. That's all noise. We've got to be able to wash that noise out. But the real reason I'm getting myself prepared is this indicator, using my normal technical analysis that I would use on any positive day, negative day, or flat day, is showing me that this pattern can technically break down to that level to test the bottom here. That's the reason I have to then get myself prepared. Now, before then, we've got a whole bunch of levels of support. So let's not get too caught up with that price target just yet, but let's make sure we're prepared for it. Before then, we've got to break down from this pattern. First, you're going to get some support from here. Can we bounce and go back to the top of the triangle, right? If we do break down indeed, and we get a close of the 4-hourly candle before, a nice move down towards that 19,200 range. If you can clear that 19,200 range, then I'll be looking to hit the first price target at just below 19,000, so around 18,900. If we then continue, and maybe you'll get a consolidation, right? It won't necessarily be that when you fall, you just keep doing this, right? That's not how it happens. What can happen is you can start breaking down, get some support here for a while, then you go meet the rest of the target, and then once you consolidate back up for a bit, then you continue back down, consolidate up, and then continue, and then you hit your price target back at the low, right? So that's what I'm getting prepared for mentally. And if I look at this, I'm also bringing out the EMA ribbon here on a Saturday morning because I have nothing better to do, guys. What is my life? And you can see the run up yesterday when the non-farm payrolls came out, ran you into the EMA ribbon, faked you out, thrown you back down. And the traders are so ruthless that they do it so quickly. I mean, look at that. Let's hop that over to the hourly candle. Look at that, how they quickly throw you down in 2 candlesticks, right? They pump you up from the bottom there all the way to the top, and then they chuck you back out in 2 hours. There's nothing you can do if you're not experienced. You just get wrecked on your leverage positions. Okay, so you can see the EMA ribbon acting as resistance, pushing us to the downside. What is the hope here? How can we get out of this pattern? Because there must be a way, right? If your Bitcoin price right now, there must be a way that we can recover. What is it that we need to look out for? What could the signs be that we're going to recover? I'm going to share that with you guys as well. So what we want to do is you want to see higher highs and higher lows. Now, when you end up in a symmetrical triangle, by definition, what has happened? You've created higher lows, right? And you've created lower highs. And therefore you create a triangle. So this is neither an uptrend or a downtrend, which is why it's called a continuation pattern. Now, if any of you guys want to know all these things in detail, I've put this in a free trading course, and I really didn't want to put it for free, guys. Like, I had people in the team saying, guys, just do not put this out for free. Why? And I know why, because the psychology, if I put this out for free, none of you guys are going to go watch it. But I've done it. I resisted the temptation. I said, guys, I'm going to put this out for free because there is a new crypto trader on every single day. And I don't think it's fair for big boys out there taking advantage of you guys because you don't know how to draw a trend line. You don't know how to understand these candlesticks. You don't know all the chart patterns. You don't know all the basics of technical analysis of using your EMA ribbon. Excuse me. Of using your EMA ribbon. So this is something I've put into the links in the description to Skillshare. Go check it out. It is free. Use it. Please don't just because it's free suddenly devalue it. Imagine if you paid over $1,000 for that course. Go and watch it, please, guys. And tell me if there's another crypto influencer out there putting their TA course for free. Right, so we're going to monitor that. And the only way out now is if we create these higher lows and get out with a higher high. There's no good creating another higher low. So, for example, if we bounce here, that's no good until we post a higher high, right? So even if we bounce here, that's fine. I'm not getting excited until we then get above this high here and technically work your way up the top of the wedge, right? That's what we want to see here in terms of establishing our upward trend. This is an upward trend, right? Higher highs, higher lows. This would not be great. If we do that and then curl back around, again, the bears are still in control. They're just letting you reset the RSI, cool down a little bit before they shudder you back down to the downside, okay? So that's what I want to watch out for now. Is what happens here. Do we get another 4-hourly candle week here? And do we start breaking down to the downside? One more thing to show you guys. We need to look at the weekly time frame. Always on the weekend. It's important. It's a good routine to look at the weekly chart and remind yourselves of the greater pattern. And what you notice here, unfortunately, not a great pattern, right? If I bring out the 200-week moving average, which is something we've been doing for a very long time here, you can officially see that it is acting like resistance. This is what we were worried about. Initially, when we broke down, we're like, okay, can we quickly break back up? No, we didn't. We stayed under it for a little while, right? And then what you see is that we then had a week where we got above it, and then we stayed above it for a little bit, and then we got thrown back down. Now it's acting like resistance. So the worrying thing is, start to see that pressure continue. That's what could be suggesting that big extended move to the downside. And the volumes are not shabby here, guys. These are strong red candles to the downside. So this week is going to be critical to see what can we do. Now, fortunately, this week we've just had, which finishes on tomorrow's daily candlestick on Sunday, has been green so far, right? It has been green so far. But remember, we opened up at 19,500. So we're only $200 or $300 away from that. Can we close the candle red? In case the bears continue to show their continued strength, that would be 3 weekly red candlesticks in a row, and not fantastic news for Bitcoin overall. So there you have it, guys. There is your update on a Saturday. A worrying pattern in the charts. We need to be prepared for lower price targets. Yes, some people get excited for big pops to the upside. You've got to preserve your portfolio. You've got to be prepared for these lower price points, because if they do come, my experience tells me that they come quickly, they come fast, and if you're not prepared, you will not take advantage of those cheap opportunities. So make sure you hit that like button. Don't forget to subscribe. Go watch this video here, and I'll see you in the next one.